Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Just a quick recap today and answering some specific questions from traders regarding the setups today and just reviewing some simple concepts. There are only 3 things to do on the day. Either you're going to buy, and that is a long trade, you're going to sell, and that would be a short trade, or you're going to do nothing at all. So there's only one decision to make. You're either going to buy, you're either going to sell, or you're going to do nothing. And then if you do take a trade, the decision then is how much will you make on the trade? And we'll call that profit taking. And how much you will lose or could lose, and that is risk management. That's it. That's all it is. I've received some emails from traders asking me all kinds of stuff, and I have to just reinforce the simplicity of every trade that you might take. Now, the setups that are in the playbook, the best trade setups playbook, go back through them. If you're struggling to see things in live time, you're making it too hard, because if it's not obvious that, number one, trade signal. A previous day is a trade signal. On the day itself, you still need to have the setup. And then in the setup in your session, so you may have a setup in your session. For example, we had first red day on the British pound. We'll look at that in a second. Perfect first red day, high of day, sell setup at the Europe Open. 3 sessions, US, Asia, London, for a 50 pip, no stress, easy trade setup. Now in the US session, that was still inside of the previous day's low, and it did not give a low-hanging fruit continuation first red day trade setup. We had a low of the day reversal for a 25 to 40 pip profitable, high probability low of day 3 session 3 levels trade setup. We'll look at that as well. So you need to understand the setup in the session that you're taking. So somebody asked, how can it be a first red day if it's an inside bar? It's very easy. You can have an inside day that can be a first green day or a first red day. The inside day just makes it a potential higher probability. There are 2 types of trades: reversal trades on inside days and breakout trades for trend trades. And we'll take a look at a couple of those as well. So it's very simple. You need to make it really simple for yourself. A few traders asked about the oil trade today as well. Whenever a market breaks out, whether it's to the downside or to the upside, it breaks out of a level. That means that they're extending the high or extending the low. We had a breakout on gold that gave a low-hanging fruit trade in the U.S. session. It broke the high of the inside day on Tuesday for a reversal down to the low of the day. Remember, where is the money? So we're looking for what is the easy money trades. If you have to think about it too hard or look at it too hard, then that's not easy. That means you're trying to curve fit something or fit it to what you're hoping to see on the day. It's not like that. You have price will complete the pattern. When the price completes the pattern, there's an entry, right? And we're going to put a risk management stop loss on that. Let's go back. Risk management stop loss on that to minimize our downside. And then we are also going to make sure we lock in profits. That's it. So we're either buying, we're either selling, we're doing nothing. So it's either a long trade or a short trade or nothing at all. People are putting all these other names on different concepts that I've never talked about, ever. Never spoken about any other terms other than buying or selling or doing nothing. That's it. Everything else is gobbledygook. It is, because that is all it is. You're either buying, you're selling, or you're doing nothing. And if you buy, you're going to have a stop in place, and then you're going to have a profit target in place. If you don't know where you're getting out, where are you getting out? What is your reason for exiting the trade? How much are you going to risk? Is it a scalp, or is it a sizable, scalable trade setup to add size into? So you need to be very clear about this heading into the session so that you know exactly what you're looking for and how you're going to exit the trade. A very good question from a trader is, once I am in the trade, when do I go to break even? Now, I've talked about this before. When it breaks out of a geometrical swing high or low, out of a rectangular space, I will adjust my position to break even. And as time decay kicks in, so as we potentially end the end of a 50-minute cycle, or if we're closing into the New York Open, or if we're at the end of an hour, I will be very cognizant to watch how price behaves if it has not hit my target, because I will tighten my stop up aggressively, especially on oil and gold if it has moved a certain distance, to make sure that if it does reverse, it takes me out with profits, not taking my profits away. I'm going to walk through these reasonably quickly today because I want you to go and look at your charts. Now, we have a large dump day on the Canadian dollar last Friday. We have our opening range, our Monday opening range. We had an inside bar yesterday on Tuesday, which is also a first green day. Now, first green day is a low of the day buy opportunity if it presents. Doesn't mean there couldn't be something else on the day, but that is a potentially high possibility setup if it presents. It gave a buy low setup that did not eventuate. Now, I talked about this in the playbook. If we don't see this go today, after our first green, say we had a buy low opportunity in the U.S. session on at the U.S. 12 candle window. No major news on the schedule today. We do have major news tomorrow, CPI. I have talked about this. I have no idea what this market's going to do, but right now it is coiling sideways underneath of the high of our initial bounce Monday, Tuesday. We could have a first green day parabolic setup eventuate. I have no idea what this will do by this time tomorrow. I know that we have CPI. If there is a setup tomorrow heading into CPI, I will look for the first bounce opportunity. First green day, we have a dump day, we have our opening range, we have a first green day, and we have a coiled market sideways into a second day, potentially parabolic first green day trade setup. The Swiss franc gave a low of the day buy opportunity after our first green day. We had a dump day again on Friday. Friday comes down into our opening range on Monday. Tuesday then gives us our first green day close. So first green day again, the close is above the open. First green day. We have a peak formation low on our Monday opening range, and that gave us a buy low opportunity at the Europe Open for a vertical move back through the high of the day. First green day setup, Swiss franc. We had a large dump day on Friday on the Japanese yen. The market traded higher on day one. Our opening range on Monday came down and traded as an inside day. Now, just coming back to our Swiss franc and our Canadian dollar, they were also inside days. So again, just reinforcing, somebody asked, I thought it was an inside day. How could it be a first red day? That has nothing to do with it. The inside day, there is an inside day trade. There are inside day trade setups, but we can also have an inside day that is a first green day or a first red day. So that is something that you need to understand. I've never ever said that you couldn't have a first red day that wasn't an inside day. In fact, most narrow range days on a Monday or first red day, first green day will present as a narrow range or an inside day. So we have a first green day on our Japanese yen. The close is above the open after our opening range on Monday. After a large dump day, so remember the criteria for a first green day trade setup: dump day, first green day, and then a low of the day buy opportunity. Now, we had a low of the day buy opportunity in the Europe window for a long trade. Now, in the U.S. session, there was no low of the day buy opportunity. So clarifying again, that we can have a session trade based on that setup that gave confirmation of price action, giving us a long trade in the Europe-London window. But that was a high of day situation when we came into the U.S. window. We're at the high of the day, high of the week, not a low of the day buy opportunity. So we had a low of the day buy opportunity in Europe-London, but not in the U.S. Some traders were looking to scalp that down. That is not something I would be looking for. I'd be looking for something that is a best trade setup heading into the session. You're selling into a breakout market. It's a high of the day scalp, but just in terms of the probability, it's a lower risk reward type of opportunity as opposed to taking low hanging fruit on gold, high of the day opportunity in oil, whatever that may be. British pound was first red day, so just keeping it simple. Pump day on Friday. We had day 1 breakouts, day 2 breakouts in the market. That broke out. I drew a horizontal line across, so the breakout this is a 15-minute chart. Okay, it was an inside day. Again, somebody asked, how can that be a first red day even though it's an inside day? That has nothing to do with it. First red day is closed below the open after the pump day. Then we have consolidation. We have a high of the U.S. session and a breakout level high from Monday's breakout trade. And we have a low of the consolidation, which turned out to be our low of the day in the U.S. session. First red day setup is a high of the day sell opportunity when it presents. We had 3 levels of rise. We had our low of the U.S. session down in level 1, just below the quarter level. The pump up to 75. The consolidation, and then the vertical pump up off of 50 from the Asian gap into the Europe Open, and the engulfment 30 minutes into the Europe Open for the short trade back down to the low of the day. Simple. There's nothing, no fancy terms. It's first red day and a sell high opportunity. First red day trading has been around for decades. So you can put all these other names on it. Listen, let me repeat this. It's been around since Jesse Livermore's days. Nobody just thought of this. We can put fancy terms on everything. It's a high of the session sell opportunity. New York, Asia, London after a first red day. Think about what's happened. First red day has broken down and they've pumped it up. We broke down. The close is below the open and they pump it up into the failed breakout for the high of the day short trade in the Europe-London window. When we get to the U.S. session, it breaks down to the low of the day and reverses. So, again, if we had broken down below and they pumped it up into the open of the U.S. window for the short trade, either first hour or New York, that's the low-hanging fruit continuation. But we've had a false break reversal engulfment, again, heading into that second hour right before the New York Open for the 50-pip stop hunt into low-hanging fruit on the way down in the short trade from the London session. Simple as that. Now, the difference with this trade off the low of the day, so high of the day, first red day, this is a scalable opportunity in line with the broken down market. Buying the low of the day, even though it's a high probability, high possibility, the question I always have for traders is how much size are you willing to put on this buying the low of the day? I would be more inclined myself to be taking a low-hanging fruit trade on gold or a high of the day opportunity in a broken down market on oil. So once the market breaks down and reverses above this consolidation, I would be looking for that continuation on a smaller time frame, scaling in this area more so than just scaling in down low. Now, that's my own preference. That's why selling up here, I'm more in line to sell up here because this is, as you hear me say repeatedly, price is in a box. There's the box right there. They brought it up to the top of the box for the sell high. We're down at the bottom of the box. We got a false break reversal, but this could pop in and still break down. So the size for me is where I can see where I can add size in on a 3-session setup for the continuation short trade as opposed to buying low on the stop hunt back up. That's just my own personal choice. But those are the types of things I want you to think about when you're buying the low and selling the high, is what type of setup do you have? So going to Europe, somebody asked me why the euro didn't go and the pound did. Well, the euro was not a first red day. We had an inside bar. We have day 3 breakouts now in the market, but this was an inside bar. The market did not trade up and break the high of the inside bar until the U.S. session. So there was no trade setups on the euro for me whatsoever on this day until later. If somebody wanted to short that, I wasn't trading at that point, and this is not what I would want to be taking. This gold, for example, which we're going to talk about in a second, failed at the high and broke down before pulling back and continuing down through the low of the day. This market broke out in the U.S. session. We still do not have a break in structure. We have day 1 breakout traders, day 2 breakout traders, and day 3 breakout traders, day 3 longs in the market. S&P, we had our opening range higher high. So we had a breakout of Friday's high. That market pulled back into the end of the session and put a peak formation low in on day 2 that broke down and continued to go higher. So there's our initial balance, high-low. This market traded above Tuesday's high heading into the U.S. session. We were in a breakout prior to the U.S. session. That market traded back into the breakout before reversing and continuing in the long direction. So we have day 1, day 2, day 3, initial balance. So remember, opening range, initial balance. This market is still in a breakout to the upside. We have day 1, day 2, day 3 longs in the market. We have CPI on the schedule tomorrow. I had nothing of any interest in this on any of the U.S. indexes. They were all similar patterns. We're low of the week for Tuesday. So this now potentially is our day 1. Day 2, we have day 3 longs in the market. So 3-day setups versus day 3, 3-day breakouts, different understanding. But we have our low of the week, day 1, day 2. Tomorrow is day 3 with CPI on the schedule. Oil broke out heading into the U.S. session. We had a first bounce, just trend trade in that first hour of the U.S. session in line with the breakout. So we again coming back to, we had an inside bar yesterday. The market traded down. We had higher highs in the U.S. session. Higher highs, think dump and pump inside bar. The market auctioned down and reversed out of the consolidation from the low of the day. It did not take out the high of the day heading into the U.S. window. That is a dead giveaway for an explosive, coiled trend trade day 3 back through the high of the week. This gave trend traders a easy 7,500 pip move straight through the high of the week before this market broke down and reversed into the second hour. Right at the New York Open, gave a nice little M structure underneath our peak formation for a 50 pip short trade back into breakout traders from the first hour of the U.S. session. Gold was a textbook low-hanging fruit opportunity for an easy 50 pips back to the low of the day. It was actually a bit more than 50, but 50 easy pips. So this market broke out. Yesterday's an inside bar. We'll go to our colored template. This market broke out of a 100 pip box. So just in simple terms, we're inside of a 100 pip box. So high to low is 150. And they broke out today and failed. That market broke down. Somebody asked a good question. What's the difference between a breakout, false break, and a failed breakout? So again, I'll repeat this. A false break is when you're going to see a marginal little breakout and pull back, reversal right away. A breakout market is a market that actually trades and breaks out and continues to trade outside of the range. 1 push, 2 push, 3 pushes, and it breaks down. This is prior to our U.S. session. So we're back inside of the previous day's high on day 3, and that was an inside bar. We have inside bar breakout traders in the market. This is right out of the playbook. Page 69, false breaks and trend trades on the inside day. Okay, and this is a textbook 3-push pattern against the trend back into the breakout for the easy low-hanging fruit continuation. This is right out of the playbook. Low-hanging fruit, US session, 3 pushes, but the most important thing to understand again is the time of day. This market breaks down at the New York Open. 1 push, 2 pushes, and a high of day reversal, high of session reversal underneath where the breakout failed. I'll just highlight this so people can see it. At the double zeros, we're pushing up into the breakout, the failed breakout. They drop it down and pump it up one more time. This is on our 5-minute chart at 9:30 New York on level 3 of a 100-pip box. Your worst fill should have been at 75. The best fill was somewhere in the area of 85, 87 for an easy high of session, low of day trade. Remember, breakout traders are in the market. That breakout failed. We're on day 3. They broke out. We have inside bar traders in the market. Where is the money? Low of the day. Low of the day. Now, another good question from a trader was if this is first red day at the end of the day, would this be day 1? Yeah, it would be, because we have our false break at the high of the week, and that's what typically will start our day count, but we won't know that until we have a day 2, right? So we don't have a first red day yet. We have a market that's possibly going to close as a first red day marginally, or a doji day. That's almost similar. We have a break in structure. We've just barely tapped the low of the day, but this market, remember, could continue back up tomorrow to the high of the week. So it all depends on how price behaves. If this market was to break down and pull back heading into CPI tomorrow, we could get a market that goes for a large ride all the way down, right? But if this market goes higher tomorrow, okay, that means nothing. That is not day 1 anymore. This could potentially be a reset. This entire block of volume right here could end up being a reset on day 3 for a market that will continue to go higher. And that reset is below the high of the day breakout that failed. So we don't know until we see how price behaves tomorrow. But as far as the inside bar, we had the inside bar trade high of week that failed. US session, 3 pushes, 9:30 New York Open for a blow off of 50 plus pips to the low of the day. Keep it simple, traders. Remember, there's only 3 things you need to decide if you're taking a trade. If you do nothing, there's nothing to decide. If you buy, there are 2 things you need to decide. How much will you make and how much will you lose on the trade? If you're going to sell it, how much are you going to make in terms of taking profits, and how much will you lose on risking on that trade? It's as simple as that. All these other terms and concepts and smart money, all this stuff, that's gibberish. It really is gibberish. Have a plan. Have a setup. And just remember what I said. Just buying the low and selling the high is fine, but where are you going to scale up on those trades? If it's a 90-10 opportunity, how are you going to grow your trading business? Remember, these setups are based on scalable opportunities because they're 90-10, not 50-50. Really think about that. Next time you're looking for trades, look for the setups that offer you 90-10. Keep it simple, traders. Congratulations to the traders that nailed those trades today. They were fantastic textbook opportunities. Keep getting better, 1% better every single day. Keep it going and keep it growing. Grow your trading business, and may the markets go with you.